Hi, it's Natasha with SOLDbyNat.com here, and today I am with Mr. Kevin Jefferson, the People's Lender. Woo-woo. So we are going to ask a lender today. Before we get started, how long have you been in the industry?
I've been originating loans for about 3.5 years, and prior to that I was a realtor for about 14. So I've been around real estate for about 17 years.
You get the grind.
I get the grind.
What made you go into mortgages?
Funny, when I moved to Georgia, we were looking to purchase a home. And the lender that was referred to us, was asking his normal questions about what I was going to do. And he asked me if I was ever considered being a loan officer. Then I told him I had, but where I was located, I'd been a realtor for so long that people would still associate me as a real estate agent as opposed to a lender.
Okay.
So when I came here and decided what I wanted to do, it just made more sense for me to become a lender and reinvent myself where no one really knew me.
Well, kudos to you, like lending. I know what I go through. I feel like the lenders have a harder time.
I think it's a misconception. I think that we both work super hard in what we do.
Mm-hmm.
Like when people ask me, do I miss being a real estate agent? I tell them in this market, no, because I don't want to show somebody 30 houses from Snellville to Fayetteville. So, it's totally different, but we do work a lot and we work late so we can get you guys what you need. But when we're not working, you're out showing houses and inspections and negotiating. So I definitely know that, we're both equally important in the transaction.
Listen, you are natural, aren't you? Let's get into the first question. What is the difference between, lenders, mortgage brokers, and like big banks? Did I ask that question right?
Yeah, you did. You
Okay.
include everybody.
Okay.
So I'm a correspondent lender. At our company, American Eagle, we lend our own funds for the transaction, and anywhere between 30 and 60 days, it gets sold off on the secondary once we have all the correct paperwork and documents in.
Okay.
So we lend our own money and we get it back selling it to larger companies, to Fannie Mae, Freddie Mac, so we can replenish that warehouse line. What a broker does is they work with multiple companies directly,
Okay.
and each one of them may have different lending criteria. So the broker, where they don't lend their own funds, they're able to be aggressive in terms of the rate that they have the ability to offer because they're shopping it for the best rate for the client.
Okay.
Sometimes the problem is that the person's credit gets pulled multiple times depending upon the criteria that's required by the different company.
Okay.
And if a borrower has or wants down payment assistance, all brokers don't deal with down payment assistance.
Mm-hmm.
So then I usually get referrals from brokers that they can't do the deal on.
Got you.
A bank, I get a lot of clients who get referred to me by realtors, and the first thing they want to do is go to their bank and see if they can get approved.
Okay.
And I always educate them and say, hey, that's a great idea, but the bank criteria is a lot more stringent than what lenders and brokers do, because banks are in the business to take in money and not necessarily always loan out the money.
Okay.
Even though they have mortgage divisions, that's still not their bread and butter. With that being said, people usually go and find out that they have to have a 640 and no late, so it's a little bit more difficult. And they come back to me, but it's, big banks have great opportunities in certain markets because they have to do so much lending in the community that they're in. But
Okay.
typically that window that a person has to fit in is very small to get that community grant.
Okay. Gotcha. Is it the same for credit unions?
Yeah, credit unions is about the same. They're a little less stringent than banks, but they do have products that they can hold. So to premise what I did say, banks do offer certain things that us as lenders and brokers don't offer.
Okay.
If we can do doctor's loans where I'm at, but if someone is savvy and they want the best out of the loan they can get, they're probably more beneficial to go to a bank because they can hold that loan in-house where we typically have brokered it out.
Okay, so what's a doctor's loan?
Physician's loan, I'm sorry.
Okay.
So if someone's a physician gets out of medical school and, obviously at that point they don't have 2 years of work history
Okay.
and they've got a ton of debt, they cater that loan to them because we know that physicians make great money.
Oh, okay.
Yeah.
So this wouldn't apply to your average student loan. You used to have a lot of student loans.
No, that wouldn't apply to the average person. It's pretty much physicians,
Okay.
dentists, or someone like that, neurologists or
Okay.
anesthesiologists or someone like that.
Oh, okay. That was great information. Speaking of student loans, I know there was a change maybe a couple years ago with how student loans are factored into, to make a loan work.
Right.
How is that affecting people that have a lot of student loans?
It plays a huge part. So I guess it'd be easier to explain.
Mm-hmm.
When I first got in the industry, they counted 2% of the remaining balance on your student loan debt.
Okay.
So if you had a $100,000 student loan debt, we had to carry a payment of $2,000. Whether you were paying it, it was deferred, or you were on some kind of repayment plan. Well, that $2,000 is typically half of someone's income. So if they have a car payment, then they don't qualify. I think it was July 2016, they changed the rule to where you could count 1%, which ended up letting more people get into homes, even me and my wife.
Okay.
Because we both had student loan debt. They changed that rule and it instantly allows for us to qualify.
Okay.
But the caveat to it is if you're going FHA, you've got two options, is to carry 1% of the balance or to have a fully amortized rate, which means the payment is set from payment 1 to payment 240 or however long they extend it out.
Okay.
So if a person has $100,000 in debt, then we have to carry a 1% payment, or we need to find out what that amortized payment is, and they have to get in that payment plan. With conventional, it's a little different.
Okay.
Conventional, you can carry the 1%, but why? If you can use the payment on your income-driven or income-based repayment plan. Example, that same $100,000 loan, I have a income-based repayment plan that says I pay $100 a month. As long as we can document that, that's all we have to carry, the $100 a month.
Okay.
The difference is though, if you're in deferment and you don't have an income-based repayment plan, I always suggest my people to get into one, because if not, we have to carry the 1%. So if you're in deferment and you're using conventional financing, you have to carry the 1%. Or if you're an income-based repayment plan, we can take that payment, which is typically a lot less than the 1% that we have to account for.
Thank you for breaking that down.
No
To
problem.
me, because I got that question the other day, and they're like, "Well, they're deferment." I was like, "Hey, no, there was a change
Yeah.
recently, so we would definitely need to speak to a lender."
Let's speak to a lender.
Lender.
Yep.
Okay, great. The next question is credit scores.
Credit scores.
So, what is the magic number?
To me, I think the sweet spot is 640.
Okay.
Although with FHA, we can do as low as 500. You have to put 10% down.
Okay.
In order to put the 3.5% down, you need to have at least a 580.
Okay.
But what people don't understand is that the interest rate is indicative of what your credit score is.
Okay.
So I say 640 because there's a different, if I have a 640 and you have a 620, my rate is typically going to be slightly better because there's a threshold. So from 580 to 619,
Okay.
there's one rate, a percentage that you get. And then from 620 to 639, your rate is different. At 640, you start getting better rates.
Gotcha.
But it's not solely based on the score either, which a lot of people don't understand. When we price out rates, even though score is looked at, there's a lot of other factors in there. How much is the loan amount? Does the person have any type of reserves?
Okay.
What's their debt to income ratio? Because we could have the same 640 credit score, be buying the same house, but my DTI is 55% and yours is 35%, you're going to get the better rate because you're not as much risk as I am.
Risk. Okay.
It's always risk factor.
Okay.
So when people quote and they go to a lender and say, hey, what are your rates for today? I never tell people because I don't know what your score is. I don't know what program you're using. I don't know how much you're putting down. So there's a lot of different factors. Typically when you hear rates are 4.5%, then that's just a generic rate. If you look at the fine print, it may say 720 credit score with 20% down.
Right.
Yep.
Okay.
Yep.
Okay, so speaking of that, so when somebody says, I want to buy a house, I get a lot of people that contact me and they're like, okay, I'm ready to buy. And then we talk about financing because lenders are the major key. Like, we work as a team.
Right.
Like, I need the numbers guy, Kevin, to give me that pre-approval to say, okay, we are good to go. And then I start working with you to find that house. So that's where I then point them to a lender.
Right.
What should they expect when contacting a lender?
So what they should expect from me is for me to ask them before I even send them to my online application to take any information from them, I always ask them a series of questions. My series of questions are started with, have you been working consistently for the last 24 months? Okay. It gets misconstrued because you hear 2 years. And yes, 2 years is 24 months.
Okay.
But if a person's on a seasonal job and they're off 3 months at a time, we still have to piece together 24 months of work history in that same industry.
Okay.
So that's why I always premise 24 months versus 2 years.
Okay.
The next question I ask is, have you been foreclosed on or had bankruptcy in the last 7 years? Because that makes a huge difference in whether you can qualify.
Okay.
If they've had bankruptcy and they say yes, then my next question to them is, was there a home included? Because if the home's included, the time period we have to wait is a little bit longer than if there wasn't a home included. Yep, it is.
Okay.
Yep. The next thing I then ask, once I've got those questions answered, I ask them when's the last time they've taken a look at their credit score. And typically 8 out of 10 people say I've looked at Credit Sesame or Credit Karma or My FICO, and I always explain to them that the score is going to be different than what we see. And I give them an example of, if they apply for a mortgage today, a car and a credit card, and they had all 3 credit bureaus pulled from all 3 industries, all the scores are going to be different, because we each have our own algorithm that we use.
Okay.
So whenever someone gives me a credit score, I always let them know there's a potential that my score is going to be different. So if you have a 650 and I call you back and say, hey, Mr. Smith, your score is 620, your score didn't drop 30 points. Because that's what I get. My score dropped 30 points because you pulled it. No, that's not the way it works. So I tried to let them know up front the score was never the same. And then they get a better understanding of that, because a lot of those programs use Vantage Score versus FICO.
Okay. And
Vantage scores are typically always higher because it's a different algorithm. FICO is typically on the lower side, and it's different. My score will be different than what you pull from my FICO. So it's a lot to the credit that people don't understand in terms of the scoring model.
And that's why I refer people to lenders. Like, I'm a realtor. There is no way that I could stay abreast of all the information that you have and the changes that you have to stay abreast of. So that's why it's so important that we work as a team.
Yeah.
Okay. So what else? So we talked about work history. We talked about they had bankruptcies or foreclosures. We talked about credit. What else? Questions.
So then once we get to that point, and we understand that they have or have not been foreclosed or bankruptcies, they've been on their job consistently, they can show a 24-month work history, whether it's just that job or another one similar, we can piece all that together. Then I send them the link to my online application.
Okay.
The online application, I ask for the basic information, name, phone number, social security, current address if you've been there for less than 2 years, current employer, and email address, so we can e-consent them, meaning we can send them documents electronically during the course of the process.
Okay.
Once we get that, then and I look at the credit and I see what the score is, then I give them a game plan. If they have the score, then I ask them for a series of documents. If they don't, I don't just say, Mr. Smith, you can't qualify. I say, hey, Mr. Smith, this is where we're at. You have a 580 credit score. While we can do 580, I think it's more indicative for you to try to increase your score. And I put something in my what if simulator to show what you could do to increase your score, and it's just a matter of paying down on your credit card debt.
Wow.
And that will increase your score.
Okay.
And let's talk about credit card debt real quick.
Let's get it.
So what people don't understand, and it may not make sense when I say it, a lot of times the first thing they want to do is pay the credit card completely off. And that's not always the best opportunity to get the most points in the credit scoring model. I'll give you an example.
Okay.
I had a lady, she had a 601 credit score, and she said, oh, I'll just pay the credit card off. And I said, no, don't pay it off, because if you pay it down to $10, you get a higher score. And she says, Kevin, that doesn't make sense. Well, it doesn't make sense in hindsight, but when you look at the algorithm, that was one of the few things that she had a payment on. So if you take away that payment and showing that credit, then she doesn't get rewarded for having a little bit of credit and a low balance. Okay. So we always tell people, when you're using credit cards, to make sure you're between 30 and 10% utilization. Sometimes it helps if you pay it all the way off, but each person is different.
Okay. Okay. So speaking of credit, a young lady the other day, she said she wants to buy, but she was like, her parents always told her don't get any credit, so she has no credit.
Yep, she has no credit.
What do people do in that case?
So there's a couple scenarios. If you choose FHA, we have an option where you don't have to have a credit score to qualify for a mortgage.
Okay.
Like anything else, the rate's gonna be slightly higher. You're typically going to need your 3.5% down and your closing costs out of pocket, but it is doable. In some cases, though I have the option for the no credit score, I have ways to help them increase their credit so that they get a better rate and a better opportunity.
That's awesome, because I like that. Yeah, you may not be ready right now, but here's the things that you tell them what they need to work on and do. And that's key, because there are some people that just don't do it. Like, if you are motivated and serious about buying, you have to go ahead and implement this plan. The lender's going to give you that plan, and you have to work the plan. Like, we can't create miracles.
Yeah.
We can get you to the table, but you got to work with us.
Work with it. Yeah.
So speaking of getting to the table, why did I ask for so much information?
Because we want to make sure that Susie Q is Susie Q.
Okay.
And somebody's not using Susie Q's credit.
Okay.
One of the hardest things, Natasha, for me to get as a lender, and I thought it was just me, but when I talk to my counterparts,
okay,
it's industry wide. I'm talking about lenders I use back home in Delaware, Maryland. It's for people to give you the right documentation. In the process, the best processor is the borrower, because they have everything that we need.
Okay.
Meaning we need the most recent 30 days of pay stubs. This is September of 2019. We can't use July of 2019.
Okay.
It has to be September. If you got paid today, we need that statement, even though you gave us the previous. We always need current documentation.
Okay.
We need your most recent 2 months of bank statements, all pages, even if it's blank. A lot of people send everything, but they leave the blank page out.
Okay.
While I know the page is blank, the underwriter's not going to look at it and say, oh, it's probably blank, don't worry about it. They want to know, okay, I don't have page 10 of 10, what are they hiding? Because that's what their job to do, is to figure out what's missing, or is there something going wrong.
Okay.
So we get all of those pages. We get the last 2 years of W-2s and or 1099s. And then we get the last 2 years of tax returns, federal only,
okay,
all pages and all schedules. And when I say all schedules, here in the Metro Atlanta area, a lot of people have full-time 9-to-5s, and they also have businesses that they operate.
Mm-hmm.
And a lot of times, the business that they operate, they do the right thing tax-wise by taking advantage of the tax laws that we have here in the United States and paying less on taxes.
Okay.
However, that typically hurts them because whatever they lose in their personal business flows over to their own money from their 9 to 5. And if you were making 60 at your 9 to 5, but you lost 10,000 on the business, now it looks like you make 50. Yeah,
yeah. Okay. So that's why I tell people when they, know buying is on the horizon and they're self-employed or they have a situation like that, like talk to your tax professional. Like writing off everything is great on one side, but then it will hurt you when it comes to buying. Yeah. Okay. All right. That's great. So as far as we talked about them putting in the application, you told them what they needed. About how long does it take for you to get back to them with a pre-approval, provided they give you all of the right documentation, right?
Yep, okay. Provided they give me all the right and all the documentation. Okay. So something that I had to learn was I had to set up realistic expectations.
That is key.
Yeah.
Okay. Yeah.
Meaning, I've had people give me everything but their most recent pay stubs, and they say, when can I get my pre-approval? And I tell them, I can't pre-approve you without your most recent pay stubs. And they said, well, you see the direct deposits in my account. True, I see the direct deposits, but is that a slow week? Was that a ton of overtime? Was that a partial check because you didn't work because you were sick? So the pay stubs allows for us to maximize the income that we can use for you, and that's beneficial. You may receive overtime, and that check might not have overtime that we can use. So we want to see the bank statements, and we want to see the pay stubs so we can make sure that we're using the most accurate information to help you qualify for as much as possible.
Okay.
And not get you in over your head.
Okay.
The other thing is that along with that, we need to make sure that if you're watching this and you haven't started the home buying process, I have a few action items for you to do to make it easier on myself, Natasha, as well as yourself.
Okay.
If you go by Susie Smith, but your name was Susie Jones, and on your license you're Susie Smith, but your bank statements and pay stubs still say that you're Susie Jones, get all that changed so they all look alike. Because if we send it to the processor, she's gonna ask us to get letters of explanation explaining if you're Susie Smith or Susie Jones. Okay. Because we wanna make sure that we protect you. It's not to be hard, we wanna make sure that someone is not out trying to purchase a home in your name using a different name. Okay. So it has to be accurate, and that will save you down the road having to write a bunch of letters. Now, if you want to write the letters, that's fine and we can accept it, but I think it's a lot easier and an emotional and tedious process for you to kind of nip some of these things in the bud up front and make sure, hey, I'm putting myself in the best position to purchase this home.
Right, like that is key, setting those expectations, and I know I'm gonna work on doing a better job at that, because once they have it in their mind, they know what to expect. Because I had someone say like, well, I don't like giving people my information. No. So with that explanation, I can see why somebody now, okay, I get it. They have the right perspective going in. This is why they need this stuff. But if they don't know anything, it's just like, why y'all need all this?
Yep, and that's the thing. Like I had someone send me their bank statement. Recently, I had one person send me their bank statement where they had cut out the bank statement number. Bank account number, and then I had one person send it to me where they had blacked it out. So we had to go back to them and say, I understand you're trying to protect yourself, but we need to know what account this is. It could be the same name, but not your account.
Okay.
So we have to make sure that we have all that information. And I understand people are trying to protect their privacy, and I know this may sound crazy, but you've already given us your social.
You're right.
Which is more important than the bank account number. So definitely give us what we need, and it just makes it a lot easier. The other thing is I try to meet with clients or do a video call so they can see who they're talking to.
Okay.
Because what happens is I'm sending this guy a bunch of documentation that's pertinent to my life, but I don't know what he looks like.
Okay.
I know Natasha sent them, and I don't think she would send me anybody that would take advantage of me, but it's just a comfort level, and that's cool. A lot of times people will not want to meet with me, and I try to push it. But they'll say, "Oh, you're trustworthy," or "Natasha sent you, so I'm good." But the ones that seem apprehensive, I'll meet with you, and we can get that relationship. It makes it a little bit easier getting documentation.
That's good.
I've been to Camp Creek to grab paperwork from people.
Really?
On a Friday.
Oh, and that traffic. You don't know about that Georgia, Atlanta traffic.
Yep.
Yeah, another thing or another explanation that I give, which really sounds basic, but essentially why the lender is asking for so much. Like, people are asking these people to lend you $400,000 for you to buy a house. If somebody asked you for $400,000, you would vet them and make sure that they fit the criteria too. So you just gotta look at it like that. Just provide the lender what they need. Doesn't it make the process go so much smoother?
It does. And that was great that you said that, because I tell people, let's look at it. You're bringing 3.5% of that $100,000, so you're bringing $3,500. I'm providing you with $96,500.
Right.
I need to make sure that this person that we're providing these funds to has the ability to repay us. We understand certain things can happen. That's why we have insurances, but we want to make sure out the gate that we're sending this money to a viable buyer who's going to take care of this house and continue to make payments and live their life and go to other homes before we just send it to any random person that may foreclose on in the next 6 months.
Right. A lot of people, ask about being a first-time home buyer. And then the second part of that is going to be down payment assistance.
Okay.
So people say, well, I'm a first-time home buyer. Don't I get money? And just to clarify, a first-time home buyer is considered
someone who hasn't had ownership in a home in the last 3 years. Not purchased, but had ownership.
Oh.
Example, if someone passed and they left the house to you and your name goes on that deed, you now have ownership of a property.
Okay.
Even though you didn't buy it or pay for it, you now have ownership in the property.
So that would cancel out your
first time home buyer.
Okay.
And what the first time home buyers program is essentially down payment assistance program.
Right. So there's no separate category that says, oh, you're a first time home buyer, here's $10,000. We just give it to you. No, it applies to down payment
assistance program.
And then how do those programs work? Or is it like, okay, free money here, we'll just give it to you and everybody qualifies for it?
No. So I always tell people that down payment assistance program, there's a cost to it. The cost to the down payment assistance program is either you're going to pay a higher interest rate,
okay,
or you're going to have to stay in the house for a certain period of time. So in terms of certain periods of time, I've seen anywhere as short as 3 years and anywhere as long as 10 years. And the questions I always get, well, how will they know? Well, I was in a class taking training for the down payment assistance program, one of the down payment assistance program, and the instructor gave us an example of where someone had gotten down payment assistance, moved out, and purchased another house.
Okay.
Well, they wouldn't normally know that, but sometimes from time to time, they send letters if you have to recertify or just to update some information, and it got forwarded. It didn't get forwarded to your new primary residence. It got sent back to them as undeliverable.
Oh,
so that drew a red flag. So what happened was they contacted the person and they called the down payment that they gave them due because it was less than the time period they were supposed to be in the house.
And called it due, like
meaning they have to pay it back. Yep.
Okay, so yeah, I would just strongly suggest you really understand the terms of the down payment assistance that you're getting. And then also know that every lender does not offer or work with down payment assistance programs, right?
Right, yeah. Certain lenders don't work with down payment assistance programs because their branches don't get compensated the same. Okay. So it's kind of depends on what you want to do. I get down payment assistance clients from other lenders because they don't do them or they don't want to do them.
Okay. Don't want to, because it does. And on the other side, as when say I'm working with the buyer, or maybe I'm even a listing agent and I get an offer and I get two offers. One, doesn't need down payment assistance. The other one does need down payment assistance. Yeah, we're going to look at the other terms, but really the person that has the funds in the bank kind of, looks better because the down payment assistance isn't a guarantee, right?
It's no guarantee. And then the person who has their own funds typically can close faster because there's not an extended closing because of the down payment assistance program having to do their underwriting as well.
Okay.
So a lot of times when my clients are out shopping and they have down payment assistance programs, they get beat out a lot because if someone can close in 30 days and I have to wait 45, even though my offer may be higher, they'll take the sure shot because the person has the money in the bank.
Okay.
Because the down payment assistance program, while we underwrite it in-house and you're approved through us, they could shoot it down for something different, and it's nothing we can do because it's their guidelines.
Yeah.
It's their guidelines.
Okay.
And it's at the discretion of their underwriter. And there's no, we can fight it in terms of this is what FHA says, but their underwriter can say, from our standpoint as an organization, this is what we prefer.
Okay.
And it's their money.
Yeah. So please just save up. Just save up your money. They can use like 401k is an option, right?
They can use
gifts.
401k. They can use gift from a family member. A lot of times people have the money in terms of if it's a certain amount.
Okay.
They just have to change their mindset on how they spend their paychecks.
Oh, okay.
Yep. So I'm gonna give you a real example that happened. I closed on the client beginning of this month.
Okay.
They had a certain amount of money set to the side, her and her husband.
Okay.
And they were using down payment assistance, which only covered the down payment. The market they were in, the seller couldn't contribute much closing costs as they needed.
Okay.
So myself and the realtor got on the phone with them and we just kind of brainstormed because they're great. I mean, high 700 credit scores, great borrower, we live off what we make. So what we did was we broke down to her how her and her husband could save their paychecks or as much of their paychecks as they can to alleviate some of that burden of where I'm gonna come up with the money.
Okay.
And by doing that, they didn't realize, if we just decide to eat at home and I pack lunches for both of us, we can save, $200 a week, which doesn't sound like a lot, but it is when you got 4 weeks to save it up.
Okay.
So that's $800 additional dollars.
Okay.
The other thing that we helped her figure out was she had worked somewhere and had a 403B that she left and forgot about.
Teamwork makes you
Dream work. So
okay.
that gave her the bulk of her down payment,
Awesome.
along with the money they already had saved, along with the money that they learned to save by just cutting back on certain things. And she was able to get their house, and they closed on it on time. And it was just a matter of shifting their thinking of, I don't have this money, how can I come up with it? But then when I look at it, you do, let's just try this, this, and this. And that's something that I do. I try to make sure, because everybody doesn't have $8,000 sitting around.
Okay.
Like Natasha.
I'm trying to get like Kevin.
But it's just a team effort. And the realtor on the phone, sometimes we have three-way calls just to help the buyers through, because like I said, it's an emotional process. Right. And to me, I like the three-way calls because the realtor's hearing it firsthand from myself and them, and they're hearing it from myself and the realtor. So we're all on the same page, and we don't have to figure out, what did Natasha say? Right.
So kudos to you on that, really, because everything's not always black and white. We got to figure a way, how can we make this work? And there are some lenders that they want it black and white. They don't want to have to deal with figuring this out. And to the same effect, if someone works from, self-employed, or they work a seasonal job, or you have to take all this stuff into consideration and then see how we can work it. So it's definitely really important to have a lender that can think outside of the box and figure out, how can we get this done?
How can we get it done and when? I always tell people, I don't deny them, it's just a delay. It just takes a little while. I'll do the work up front and give the game plan, but they have to help execute it. And I'm always available if they don't remember or they say, hey, what if I try this and that to help? Will it help? And I'm always there to answer those questions.
That's awesome. That's awesome. One more question about down payment programs. Does that mean that they don't need any money at all?
That is not true. So they don't always come with no money at all. Some of the down payment assistance programs have a requirement of $1,000 that you have to put in, whether it's earnest money deposit or escrow, and or the appraisal fees. With the market that we're in, the price point that we're in, the $5,000, the $7,500, or the $15,000, or whatever you get from the program, typically doesn't cover all of the down payment and or the closing costs. So while that helps alleviate a lot of the costs for you, 9 times out of 10, you're gonna have to bring something to closing. You're gonna have to bring some form of funds, you know, whether it's just $500 additional dollars or it's $5,000, you're gonna have some money in.
Okay.
There's not a lot of programs where you don't bring any money at all.
Okay.
But you know, I do say that even though you're going to get the down payment assistance, you're looking to get it, another game plan that we have is let's continue to save as much money as possible, because if the down payment assistance program denies you, you still have to figure out if you're going to buy the house. And it's not just your transaction that's affected, it's the seller's transaction, whose seller's transaction, on and on and on. So if you continue to save, and you save the $8,000 and you get approved for the down payment assistance, well, guess what? You just got $8,000 that you were able to save. If you get denied and you have the $8,000, you can go ahead and close on the house.
Great.
And you'll probably get a better interest rate because you don't have to take the interest rate that the down payment assistance program gives you.
Okay, which is normally higher than
yeah.
what you pay. I'm so glad you brought that up, because I don't want you to feel like we're saying don't use down payment. If you can use it, great, but still have that money set aside just in case something happens. So it has happened where I worked with somebody that had down payment assistance, and we submitted the offer. I put it through with the down payment assistance, but I let them know if for some reason this didn't work, they still had the money, you know, saved up, so they were reassured that this deal was going to go through.
Yeah, definitely. You definitely want to have a backup game plan, because at any given time, the down payment assistance could shut down.
Yes, because
like
that has happened.
Yep, they could shut down.
They run out of money.
Or they could change the guideline.
Okay. Awesome, Kevin. Thank you so much. Like this, you shared more than I could have even asked for. This was great. I know you guys found it beneficial. And make sure you check out Kevin. Kevin, where can they find you?
You can find me on Facebook under Kevin Jefferson Mortgages. You can find me on Instagram at The People's Lender. You can also find me on YouTube under Kevin Jefferson, The People's Lender. And I can be found on LinkedIn under Kevin Jefferson Mortgages.
Awesome. Guys, please go and show Kevin some love. He is so knowledgeable, as you can see. Like, thank you for watching. If you have not done so already, please go ahead and subscribe and give this video a thumbs up. Like, you have to give this video a thumbs up. We shared some great information today.
Awesome.
So I know it helped you on your journey. Guys, thanks for watching. Again, please subscribe and have a positive, peaceful, and productive day.
Thank you.
Bye.